Hey guys, Czar here. Good morning to you. Hope all is well. Happy Thursday, December the 12th. Can you believe we're only a couple of weeks away from Christmas? Unbelievable how quickly this year went, at least for me. This is the NASDAQ and S&P guys 1-minute charts, but I'm going to start as usual with the daily frame. NASDAQ, S&P left and right. As you can see, we had a big rally day yesterday in both the NASDAQ. A little bit more muted in the S&P, but another up day. Good, strong up day in the NASDAQ, taking us to all-time highs again. We failed to hit all-time highs in the S&P, but that's okay because I'm focused, and I know that many of you are too, on the NASDAQ as your vehicle of choice. And you can see that today so far, through the Asian session and part of the European session, we have an inside day with a bearish body for now on both the NASDAQ and the S&P. Inside yesterday's span of travel, but we are above the high of last week's range. There's the low of last week's range, the blue line, and there's the high of last week's range. And you can see yesterday blasted through that, no problem whatsoever, and still sitting above that fairly handily here as we come towards the open of the New York session in the next 30 seconds or so. 1-minute charts, VWAP, volume weighted average price, 2 standard deviation bands for those who are new. For those who are not new, I'm boring the crap out of you, and I'm okay with that because repetition is the mother of skill, and doing the same thing every single day is what helps me to become something closer to a master of a single defined process. And I'll never call myself a master because this is an ongoing and very frustrating learning process that will take the rest of my life to complete. It's a lifelong journey, as you've heard me say many times. This is the 1-minute opening candle, guys. We are open here. I'm going to put you on pause and we'll cut out dead air, sideways grinding action, non-teaching moments, things of that nature. Keep this video nice and tight. You'll notice that that phrase is even repeated almost every day. And that's all part of just repeating the same thing, really ritualizing my thought process, the words that go through my head, but also the words that come out of my mouth to a large extent as well. That's part of that thing, that routinizing and that ritualizing of everything I do and everything that you do, ideally in your trading practice as well. This is my trading grid, something else I repeat almost every day. There's the daily, there's that inside candle I mentioned, there's the big rally yesterday, and the bearish body coming into the New York session here. And this is the 30-minute, guys. Let me just expand that because the 30-minute chart is fairly important, very important to what I do. There's a clean traffic range from yesterday. Remember the CPI news? Rallying steadily from there. I did not take any trades in the morning here at all. Missed it. And I shouldn't say missed it. I just didn't participate in it because of the extended move. And that's okay. Sometimes that's going to happen, and I'm fine with it. If I have no optimal setups, I just don't trade. And just because the market did something big, either up or down, doesn't mean I should have been on it. Would have been nice, but that's not the way successful trading works, guys. 30-minute chart, guys, dropping down here into this clean traffic range. We do have these wicks to contend with, of course. I'm going to just shift this zone down just to the bottom of those two bodies right there, the pre-market bodies. You see that? I'll just move this arrow down. These just visuals to help me here, and dropping down below the open range. Let's take a quick look at the S&P. Yeah, doing the same thing over here, guys. This could be an opportunity to the short side in a moment. Who knows? So that daily frame, guys, is allowing me to take longs or shorts because it is neutral, but it's a bearish body right now, so I'm partial towards shorts. We definitely have a bearish configuration here on the 30-minute. We have a neutral config coming into the New York Open here, and now finding a little bit of support. So this is kind of messy and sloppy here, guys. This is the definition of range boundedness right in through here. You see that there? This whole piece here is all about ranging, right? And so let me just draw this visual for you so you can see what I'm talking about. Again, that's the pre-market that's coming in, but I'd like to see prices probably get beyond that, either down or up, before making any decisions here whatsoever. Pulling back into the open range on the NASDAQ. There's that messiness I was referring to. Let's take a look at the amplitude of this open range, shall we? 23 points in the NASDAQ, guys, very narrow. fairly narrow, I should say. 2.5 points on the S&P. That's a very narrow 1 minute open range. And for those who are new, if we're inside the open range, I don't even bother commenting because I certainly won't be touching it in that what I call no man's land, whether it's inside the open range or even stuck between the open range and VWAP. Very often I'll call that no man's land as well, kind of in the zone right here, VWAP, open range, right? It doesn't really apply today, of course, but get the idea. All right, guys, sell stop order here. Looks like we're resolving to the downside. Right here, stop above. Stop above the open range and above the pre-market high right there. I'd like to see this get down closer into this clean traffic range. Now, just because this hasn't gone beyond that wick yet doesn't mean much. There's certainly enough fuel and energy here on the open to move prices way beyond that without any trouble. As part of the story here, guys, I am also factoring in the bearish reaction on the PPI data. Now, that's in contrast to the bullish, very bullish reaction, rocket ship reaction yesterday on the CPI data at the same time, right? There's the 830 candle. There's the 830 candle today. Notice the difference. The market is feeling very different about today's figure than yesterday's. And so we'll see how this resolves in here. Bit of a tug of war right now. The bulls are very strong. They do want to buy bargains. And so any kind of weakness here, the bulls are looking to buy up. But notice the barcode here. It's kind of an even tug of war happening between the two here on the open. Just remaining cool, calm, and relaxed. Just because the market happens to be fairly frantic and juicy here on the open doesn't mean I have to be. I'm just going to sit here like the surfer, waiting for the perfect wave, like a predator, waiting for the right opportunity to strike. Different ways to look at it. You can simply choose or use the metaphor that works best for you, your own unique brain wiring. So nothing for me to do here, guys. I'm just waiting for the markets to react and to respond. If we get up here above, I'll just cancel this order. If it drops down below, I'll be brought in automatically, right? And all we're doing here, guys, and this is really the essence of trading or day trading, certainly short-term trading. This is not swing trading. This is not position trading or investing. There is no macro stuff going on here. All I'm saying here, guys, is if prices break down below this line right here, and I think there's a higher chance it'll go here before it goes there. That's all. So if prices cross this line, there's a higher chance they go here before they go there in that sequence. And I can absolutely be wrong, and that's called an expense or a charge or a loss if you like. I prefer to call them charges. It's a business charge, business expense. Like all businesses, there are expenses. And when my weighted coin lands on tails, it's a business expense. Very simple. And if this is going to break down here below, guys, then I'm really glad that it's spending some time here to figure itself out, right? The participants. Just let them have their time together to battle the bulls and the bears. It's a barcode here, as you can see. And let them play around a little bit, tug of war, and figure out which one's going to tire first. If the bears tire and the bulls rally, then this is canceled. If the bulls tire and the bears sell down, then I'm in this thing for the clean traffic trip, right? Pretty simple. All right, guys, we're back. And the grind and barcode continues, this equally matched battle, tug of war between the buyers and the sellers, the longs and the shorts, the bulls and the bears, the good and evil, depending on what side you're on. But now that we have all of this structure, this congestion and consolidation to work with, I'm now moving my stop down to right here, above the highest point of this structure. Didn't have this to work with when I first had this idea, and so I used the most logical place right there. That's the invalidation point. Now I can tighten that a little bit. Now, why is that helpful? Well, it allows me to tighten my target a little bit as well. It's still a very strong stop area, right? But it allows me to target something that's just a few points closer. 39.75 points to be precise to target. So through all of this, guys, remember that we have an inside day on the daily, but bearish body, so bearish bias in the neutral cascade configuration. We have a bearish trend rounding over after a very big up day on the 30-minute chart. We have a bearish break into clean traffic below this zone here. That's the news candle of 8:30 this morning. And we have the 9 below the 21. Even through this barcode, the 9 remains below the 21. Prices doing their battle, doing their argument, their little fight here, and remaining in a neutral to bearish configuration. Of course, I'm only interested in shorting below the open range in line with that and this. And I'm in, guys, and I'm in. Finally, it drops down. There are no guarantees here. This is a very sloppy, grindy morning. The break below, for me, is optimal to toss the coin, given all the things we discussed. But this is far from guaranteed here. This could snap back in a heartbeat, and it looks like it's already doing that. So I may take a charge here this morning. That's okay. It's Thursday. It's been a great few weeks. All right, guys, tagging the 75% mark here, moving my stop to break even to lock in a sure no lose here, but no guarantee on a win here. As you can see, things are pretty messy, choppy, and sloppy here. And looks like we're getting some buying coming in. But I've locked in a break even here, worst case scenario. Let's see how we do. And there it is, guys. Stopped out at break even. Stopped out at break even after hitting 3/4 of the way towards the target. It's one of those days, one of those weeks really too, where price action has been a little interesting, a little strange, a little unorthodox, but nothing wrong with that. So what I'll do, guys, as usual, is keep the video running, and we'll see how this trade plays out, whether it comes all the way back to the original stop or if it hits targets first. And that just allows us to see if it was a resourceful decision to use a dynamic stop in hindsight. Of course, it's after the fact thinking, but I know that many of you like to see that, and so I'm happy to do it. Put you on pause and bring you back. And there it is, guys. So in this case, it was a resourceful decision in hindsight to move stop to break even at either the 50% mark or the 3/4 point. I waited until the 3/4 point. Thanks for being here, guys. Maybe there'll be another trade here. I don't think so, given what I'm seeing, but who knows. Appreciate you. Have an amazing day.